Hello everyone and welcome to the new market weather bulletin. Today is Wednesday, 3rd of December, so time to check the Bitcoin chart, make some plan, form some bias, and eventually look for some trade setup. So the usual routine for our weekly planning and preparation. Market, I think, is in an interesting spot, so try to follow me until the end as we will try to see if we can find some opportunity. As always, big shout out to Bluefin for sponsoring my YouTube page. You can trade with me on Bluefin using the referral link on the description below. It's a non-KYC exchange, so very simple to join without need to share any of your personal information. Also, as always, remember to subscribe to the YouTube channel, leave a comment and a like, so you will help me to grow the page. But without further ado, let's go to the Bitcoin chart, high time frame, naked chart as always to start as more unbiased as possible, to select the level to see what is going on the Bitcoin chart. This is the daily chart, and I think we are at an interesting spot, and also we are somehow potentially seeing some development in the market that can give us some opportunity. So very quickly, you know that in very high time frame we are potentially still uptrending. This sort of structure is still more or less intact, with the exception that I always mention of this what happened here in this zone here, where technically this structure was broken bearishly, because this was an higher high, and this potentially was the following low that was broken here. But let's say monthly or higher time frame structure somehow is potentially still intact on this series of higher lows, and these higher lows is holding above this 74k 75k level, so potentially still a place to have a high time frame higher low that is technically an area very interesting for swing long, as it was very interested this area for swing long, as it was interesting this area for swing long, and potentially could also this area be interesting for swing long. Also a very interesting spot in terms of ranging environment, because we always looked at both the structure and the range environment, because somehow if we map the level in this way, swing high, swing low, that created this range, deviation below, deviation above, the range is still intact, and somehow we are trading at range low of this potentially this range. Then very discretionary way of selecting this range. We could also potentially see the range as being this bigger one. So again, I like to see it in that way, but I would respect any other way people would objectively try to map this range. Also, I think another interesting note is that if we look at this latest structure, we are trading just above the 0.75 level of this structure here, so potentially still in a higher low territory. If we want to be a little bit more objective, we could also use the fixed volume range profile of this consolidation that started 1 year ago, back in November 2024, so actually almost 13 months ago. Also this, we get a value area high, a value area low that is technically still holding. To add further confluence, if needed, to this level, we know that we were looking for a weekly structure. This is the weekly demand that is here, and this weekly demand is actually holding and providing some sort of bounce from this level. I selected the last red weekly candle before this move up. So we do have several confluence on this level, and this, at least for my style, for my approach to the market, this is not an area where I would look for swing short. So it's more an area where I would look for swing long. This doesn't mean that I could not look for shorts, but at this level, to me, short are more for the short term, because we are again at range low, we are again potentially, not confirmed, on higher low level on a time frame, and we are at demand. So swing short, if I need to repeat this 1,000 times, I will repeat it also 1,000,000 times, are to be looked more at supply. So supply would be this higher level here, not saying price will go there, or where potentially we would form a lower high for a continuation lower down. But I'm not here to predict the market. Now we are not there, so we are more focused in the video. As you know, I don't like to make long-term prediction. I'm focused more the video on the level we have in front of our face, eyes now. So focus on the here and the now and what we can do now. So I'm leaving to the analyst the prediction of the next 6 months price action. That is something that to me is absolutely irrelevant, because I don't even know where I will be in 6 months. I just care about what can I do with the current market situation. So with all this said, let's say bias is favoring, at least at the current level, potentially swing long, still always ready to play some scalp short. We know we are at range low. I can leave this for helping you to see the level, this fixed volume range profile. I will leave also here the weekly demand, and now we try to look a little bit in more detail what is locally happening. So we know that the price was downtrending, and the easiest way to see a downtrend, as for an uptrend, the easiest way to monitoring are the highs, because we are pushing higher. So whenever we break high, we know that we are still downtrending. For the downtrend, we look the lows, because they are more relevant in a downtrend than the highs. So as long as we break the lows, we know that we are clearly downtrending. So what happened in these last few hours, I think yesterday, whatever, that this series of lows, let's take the week, or without taking that 10 of October week, we kept forming lower lows, lower lows, lower lows. So what happened here? We failed in the last rejection. We shorted this level just over the weekend on this drop, but in this last rejection, at least temporarily, price has failed to form a further low below this low here. So somehow something is starting to change. So first, change in behavior that we have to objectively recognize that the market is showing us. Second, change in behavior that after the failure to form a new lower low, we also now following with a new higher high. So there is definitely a change on the behavior we had on this way down, and this something unusual. So we have to recognize when something is changing, because we have to adapt our bias, we have to be fluid in our analysis, and we have to recognize when something that has always happened on the last 2 months is, at least for now, not happening anymore. So this is the curiosity that every trader should have, to be objective and to see whenever the market behavior is continuing to do what it was doing in the past, so you position accordingly, but also to be curious and objective enough to see when behaviors are starting to change, and when behavior is starting to change, at least to question yourself, okay, it was very nice to short all these 40k and 35% drop all the way down, but probably I have to be objective and see that something in the market is changing, and the market is clearly sending message to us that something is changing. This doesn't guarantee anything. Nothing is never guaranteed in trading, so we could drop and continue to go lower and lower here forever, but I have, at least, then you're free to do whatever you want, I have to objectively see that here something is technically changing. Something is changing means that even though I enjoy shorting all this way down, now I have to start to be more careful. So we know that the market can do three things: going down as it was going down all this way down. It could potentially start to go high from here, or it could potentially simply start to range, for example, in this range here. So since we are stopping, at least temporarily, to go further down, I am more prone to give myself a more logical approach or bias that preferably in this case we might start to go up or sideways, because it appears, at least temporarily, that we are not going down anymore, because we failed to make a further low and actually we make a higher low and we also make an higher high. So this is where we stand. So structurally, the first, let's say, concept that we know at this potentially reversal moment happening once again on a potential high time frame higher low and potentially at value area low and potentially at demand is to look for a trend continuation in a potential uptrend. So we know that the market was coming down more or less in this fashion. Then we know that we failed to make a low, then we break this high, and we are more or less still amazed that after many years I'm not able to draw properly the lines, but I think you get my point. We are more or less here. So the first idea I could have is to try to continue to long this potential uptrend, so to look for an entry for a long to go higher and higher. This is the first option with the assumption that we keep going down. But I also have to, being a very objective range trader, recognize the fact that these, at least for the moment, really look like a range. I think is objectively looking like a range because there was a resistance established. Here we are potentially deviating back inside, so this could be a range, and in a range mentality the price now could potentially go back down here. So here is the usual dilemma, and I often get a lot of questions on DMs, on the comment about this. This is the classical place where, at least for my approach, the two mentality, the trend and the range, start to have a clear conflict, because if we would forget the range, we would see the structure and we potentially would like to long something like this. But if we see the range, we know it's a range. If the price fails to break above range high, we are a range trader, so we are potentially want to short something like this. So this is the case where pure price action can help you. So you can toss a coin and say, okay, I don't give a fuck about the range, I want to focus on the trend. Or in the other end, you say, okay, I don't give a fuck about the trend, I will focus on the range. So what becomes important, at least in this certain specific situation, is perhaps to add a few indicators for confluence. As you know, I've been monitoring the 12-hour RSI level 50 for a while, because generally I really like it's very important on the RSI, the level 50, because it usually gives you more or less the feeling if a trend an asset is strong and uptrending, is usually above the level 50, pushing to overbought territory, while usually when is weak is below and pushing to oversold territory just below the 50 level. So I was monitoring this. I shorted last week, I think this level more or less here, because again we were at this resistance, and this resistance here. We got the drop, but now again price, as I said, failed to break below the structure and is actually breaking above the RSI 50 level in the 12 hours. I'm using the 12 hours in this case because it's very clean, the level 50. If I show you the daily, is showing, at least to me, is showing less relevant. So in this case, my feeling, my experience, I don't know, because sometimes you make me this question, why the 12 hour? I don't know, because in this 12 hour is very clean. So I try to use what my eyes are easier to recognize a certain pattern. So since in this case, the level 50 is holding, potentially it has been broken, potentially I can gauge some strength in the market, and I would personally try to position myself more on the long side. So what does it mean? And here we are entering in the complication. So you got the RSI level 50, the fact that it was resistant for 3-4 times and was finally broken on this attempt to break higher. So since this is giving me some momentum, because the way I use RSI is mainly to get momentum, since this is giving me a momentum strength, in this specific case, I'm a little bit leaning more favorable to the trend rather than the range. What does it mean? That if I have to focus on my trend trading style, let's remove this range for a while, that is not making confusion to us. The ideal place to look for a long would be more or less a classical retracement of this structure. This is the structure, this is the last structure. So the external structure, if you have seen the last video on market structure, would be this, at least for the moment, until this high is potentially violated once again higher. So I'm looking for this structure, and the ideal entry on this would be the retracement of the Fibonacci golden pocket or 0.75, and in the demand zone that would be this one, the last red candle before the next leg up, and here we get the confluence of our entry. So on a purely structural way, my setup that I would have to take would be something that look like this, with an invalidation outside the structure and aiming a potentially further leg up. Again, not a prediction that this will happen. Potentially we could keep pushing higher because we might break above the famous range, we go above, but structurally for a swing position, so we can scalp whenever we want, but for a swing position, this would be the ideal setup I would like to take. So not sure it will happen, but this 86.4 K level would be a very interesting level structural wise. Difficult for me to place any other long, at least swing, in the middle of this big green candle, okay, in my case blue, because stop loss in that case for my style would be very tricky, because I cannot put the stop loss in a candle like this where there is no support. So to me, the only swing position at the current level is this one. This for what concern the long. In case you want to take any of this trade, even though this is not financial advice, remember to trade with me on Bluefin. You will find the description in the description below the video my referral link. Bluefin is a super cool exchange with the same liquidity of Bybit and a very similar interface. It has all the pairs you want. You can enjoy a 20% discount on fees using my referral link down below, and you would also be eligible to participate to all the campaign we run with the Bluefin team. We are currently running this campaign that is ending tomorrow, where you will get very cool trading bonus, future trading bonus, simply by depositing or simply by trading some volume. As you can see, it's a 10% future bonus cashback. So you deposit 1K, you get $100 of future bonus to trade with. Or with the volume, for example, if you made 100K of volume, you get another $100. As always, with all the campaign, make sure to read all the rules. You will find this brochure on my Telegram channel. Going back to the Bitcoin chart, this would be the primary swing long position. In this case, as we discuss about the structure, the entry, and potentially the stop loss a little bit here discretionally, in this case, this could be a swing position, as we say, where for sure, being in a range, we would respect a lot the mid-range and this volume node with taking aggressive profit here, but is potentially a position that could start to run much higher, especially if the structure here would turn bullishly, as we mentioned before. There is one caveat to be really important about the structure that is happening here, is the fact of the way we are creating this low here. As you see, the major reversal we had in this range were opposite to what is happening here. So we have low, low, swap all the low, and we start to push higher. The same up here, high, all the higher swept and taken out, and price is pushing down. Here, the dynamics you see is very different. So in this case, we are leaving some unswept low here below. So again, as I always saying, not really in the prediction business, but something in the back of my mind is telling me, be careful if we start to do something like this, move higher, fuck everybody once again, and then start to move higher, because these poor low are usually very important liquidity pools. But for the moment, I'll just keep my IQ very low and stick to this structure here. The scenario I show you is just something I'll keep in the back of my mind, but not tradable at the current moment, but something potentially that will happen in the future. So now the question you would probably asking is, but what about the range? And here is where hedging and positioning, let's say, on multiple side would be very interesting. So we say that this could be potentially our long, but in a range perspective, this is a position that is, let me remove, this was the weekly demand. Let me remove also this. Okay, we can leave it. But we also know that price here is ranging. So in this specific situation, one interesting approach where we combine structure and range, should the market be so kind to give us, is to try to find a short in this area. So since we would like to long this area, the price to come down to our long should first of all retrace for what is happening here. So here I could see two short opportunity. The one would be a drop here, a market structure break, and a further move down. So if you look at this low here to be violated, or as I posted I think earlier on X, potentially we did have 1, 2 drive, potentially going for a third drive, deviating back inside the range, market structure break, and then potentially going down. So this in a range environment could be an interesting short opportunity. The short would look in this case something like this. Hope it's not too messy, in case take a screenshot, or something like this in the second case. So in this case, we would have a short running, should this happen, running going into our entry. I would take profit, of course, before potentially filling the long, but I would leave my position running until potentially a range low. So why this is an interesting approach in terms of hedging? Because should the market deviate inside this range, we would enter short and potentially ride the drop down. We could be filled here and take partial profit on the short and move stop loss at break even, so already be in profit. But we could also keep a part of this position running should the range prevail, the range that we had here, prevail on the structure we would like potentially to trade. Should the range prevail, the structure would be eventually broken, we would be stop out, but at least we would hedge our stop with the taking profit of the short. So it's a way to profit a little bit on both situations and to protect the capital in case of the stop loss. So we will take profit here. If the swing long would work out, the rest of the short position would be stopped at break even or something around break even. If the market would decide to keep the range and to go again lower here, we would balance a little bit, edge a little bit the swing position in terms of capital loss. So I wanted this week to show you a little bit an advanced way of trading, especially the circumstances like the one we have now, in order to balance on your positioning on the conflict I have, and potentially some of you have, in a situation like this where the range is potentially conflicting with the trend. Should this trend scenario work out, then the only interest for long would be upon a reclaim of this range low, but again very far away from the current condition. This is the two scenario where I would be interested to do business, at least the two scenario I can imagine of. The market can do millions of different times. The scenario that I can imagine where I'm not able to find a setup for myself is simply the scenario where this range is finally broken and we start to go high. In that case, I'm not interested to long this level because this on high time frame is an higher high and I'm not interested to long higher high. So in the case this range is finally broken, bye for myself, not interested on chasing green candle. I will wait for some further development on price action. So this is my best guessing at this potential scenario of what are the trade setup I would be interested to take. Again, nothing of this is a prediction, so in case these two scenarios are presented, I would like to take them. There are millions of other scenarios that can happen. In that case, it's difficult for me to guess and to explain you what would be my approach. But if you're following me on X, you know I send regular update there, and I would try to update according to and adapt myself according to what the market does. So for the moment, potential swing long, structure based, potential scalp short, range based. If the range break to the above, I'm not interested on doing any business. I hope the video was clear enough. Again, I wanted to move a little bit always trying to move a little bit forward on concept, and today the concept was a bit how to trade situation where range is potentially conflicting with the trend and how to position yourself, especially in terms of multiple position in opposite direction, in order also to protect yourself by hedging a little bit on any move that the market can do. So I hope you enjoyed the video. If you did so, make sure to leave a comment and a like, and make sure to subscribe to the channel and have the notification on. And also, if you like to support me, make sure to use the referral link in the description below and trade with me with Bluefin. I think is everything for today. As always, make sure to stay safe in the market, and we see you in the next one. Bye.